Hello, everybody, and a warm welcome. Hello, everyone, and a very warm welcome to today's major markets update for Wednesday, December the 7th, 2022. Let's go straight to the charts as we have, of course, some things to digest. The first one here is the new lows. I wanted to share this with you for the NYSE as well as the NASDAQ. They're not that high yet. We don't see these type of crash level highs, but they are elevated. The NYSE new lows has not really been all that low during this rally that we've seen since the October 13 low. That's already a warning, and especially for the NASDAQ, it's been too high. We want to see these levels below 50. Excuse me. For the NASDAQ, it's been well above 50 all the time. So those ones are already warning signs and that this is not a sustainable rally yet. You want to see levels that are well below 50. Let me show you, for example, here. This is a well below 50 rally in the early parts of 2021 and the late parts of 2020, as well as here once again, all during the summer. These are strong markets, as you can see, okay? Compare that to where we currently are, and you see quite a different picture with things a little bit too high. So we've got to keep an eye on those. Then yesterday, we finally got our ideal sell signal for the PMO buy all indicator. It dropped, it topped already in the ideal target zone several times, and now we have a sell signal. The previous buy signal was here in early October, so it's been on a buy for quite some time. This is a good sell signal. This is what we wanted to see to help confirm that the wave 2/B is underway and that a better buying opportunity is arising when we are in the ideal bottom zone for this indicator. But we're not there yet. I don't have data for today, but we'll see that tomorrow. Here is the McClellan oscillator for the S&P 500. It turned negative yesterday and it is still negative today. That means the bears are in charge because more stocks are advancing than declining. As such, the summation index is now moving lower as well, and we might get soon a sell signal. There's not one yet. We've been on a buy signal since around October 24th. So that's been quite a while. And let's see when we get the sell signal. The summation index means that when the McClellan oscillator for today becomes negative, it starts dropping because you keep summing the McClellan oscillator of today to that of yesterday, which was added to that of yesterday, etc., etc. So let's have a look then at the short-term wave count. There are technically enough waves in place to consider the initial leg lower complete for the NASDAQ100. Here I have a simple ABC path higher into the early December rally. And now we are moving lower. It's right at support. I expect a bounce back to about 11,800 plus or minus 700. And then another leg lower to about 11,000 plus or minus 100. Yes, it can extend tremendously all the way down to 10,600. But for now, that is not my primary expectation. Though, as noted on the hourly chart for a while now, the B wave can become irregular. If we get there quite directly within the next week or so, then we have to consider that green A is red, green B is red, green C is red, meaning a 1 wave degree higher level already, and then all of this B wave can have completed. Here is the daily chart with a slightly different wave count where the Fed reaction high was a B wave instead of a final 5th wave. It's fine. This rally was impulsive, and now we're working on 1, 2, 3, 4, and 5. And the ideal path has wave 5 to about, I would say, 11,400 to about 11,300. These are the target zones. We should now bounce for this wave 4 and then a 5. And of course, this wave 4 would match quite well with, of course, this B wave, as long as we stay below in this case 11,825. So as you can see, one can wave count the price action differently, but then eventually the outcome is the same. If we get this wave 5 lower, then we're right in this target zone, we're right in this ideal red and black target zone. Remember, if this is indeed a irregular expanded flat, then we must see 5 waves lower. Okay, but again, even this one is pointing lower, A, B, C, and of course this one is lower, 3, 4, 5. I wanted to point out that we have our GTFO levels at around 10,700. I don't want to see the index drop below 10,700 with a first warning already at the lower end of the target zone at around 10,800. Why? Because then this B wave is starting to become too deep, can indeed become irregular, but then chances are that this whole rally was a simple counter trend rally and that we're going to see another leg lower similarly to the August to October decline. So I want you to be aware of that potential. Excuse me. But that's not my preferred primary path. Remember, with Elliott Wave, you always have a primary expectation and an alternative expectation. This does not mean that this way I am always right. No, my primary expectation is, in this case, as shown, the 3, 4, 5 for this black B wave. That's my primary expectation. If the market then drops lower, the primary expectation was wrong, and therewith I was wrong. And then the alternative becomes the primary. That's how it works. And of course, with that, we then have very simple if-then scenarios and very simple price levels one can use for trading. Trading is absolutely no different from applying the Elliott Wave. Every single time you go into a trade, your primary expectation is that the trade will be profitable. Why else would you initiate the trade? But of course, you will set your stop loss levels. Those are the levels where you know your trade is wrong. That's when you get out. That's when you change your point of view. Similar to here, we have our primary expectation that we're in this black B wave followed by a C wave. But if we go too low, then that primary expectation is wrong, the trade was wrong, and we move on. There is nowhere does it say that by providing two options, I will always be right. It has nothing to do with my ego. I am simply showing you the potential that are in the charts based on a limited set of price patterns as defined by Ralph Elliott in the 1920s, 1930s. And those will tell us what the market has done, what the market is most likely doing, and where it's most likely going to go next. That's what we always try to assess. Neither does this have to do with the fact that I'm saying the market could go up or down. No, we have our primary expectation, and that is that the market would go down. That has been the primary expectation. So if the market then goes up, the primary expectation was wrong. So you will always see amateurs that when I write a post saying, all you can say is the market will go up or down, doesn't help me. Or this way, you're always right. Well, both, as I just explained, are wrong understandings of the Elliott wave and the message I'm trying to convey. If I would like to say the market can go up and down, that is then what I will say. And then, of course, my analysis will be utterly useless. Why would I even write something? That has, of course, no meaning whatsoever to anybody's trading. So here is the preferred path, a wave 4 to ideally this target zone around 11,600, and then a drop to about 11,300 to 200, somewhere around there. And that should then complete wave C of B. If we continue to drop lower and we go below 10,700, this assessment is wrong. I'm there with wrong. That's all there is to it. It has nothing to do with me always trying to be right. Not at all. What's the point? But I regress. Here is the semiconductors, and they are in a similar path as, in my humble opinion, that is, the NASDAQ100. We could have already completed wave 3 here in green, a little bit short of the ideal wave 3 target zone. But again, that's where we start off with. Then we monitor and adjust accordingly. Now in wave 4 and then a wave 5 to ideally around 25,600. From there, we should then see this rally happening to around 3,400 plus. The initial level where I start to wonder if my assessment is right is at around 2375. That's the orange line. If we drop below 2250, I think odds tremendously increase that all we got was a counter trend rally and we'll see another decline similar to the August-October decline. That is where my primary expectation is wrong. IWM. IWM similarly looks like A down, ABC up for an A regular, regular actually, because we did not make a higher high. B wave, and now 1, 2, 3, 4, 5, ideally down to about 177, 176. Also here, my primary expectation will be wrong if we drop below 168. As you can see here, a ideal picture perfect impulse path lower nails it right into the red target zone and the black target zone. Very simple. So far, so good. I do not see a reason to change my tune. My primary expectation has been to go lower, and that's what we're doing so far. S&P 500, this is the hourly chart. Still filling in some scribbles. I expect support to hold at around 39.10-ish, and then we should rally to about 4,000, let's say 4,020 plus or minus 20 for the B wave, and then the C wave lower for potentially all of the B wave here in black. Okay, that is still the primary expectation. I haven't changed or detailed the chart in the daily time frame, but I wanted to point out that we have this gray target zone here, which is huge. It's between 39.75 and about 36.25. Why? Because B wave or second waves can bottom anywhere between 23.6 and 76.4%. We don't know beforehand which it will be. We have clearly support here at around 3,900, 3,950. We have clearly support here at 3,800, etc., etc. Where exactly the market is going to find its bottom, we don't know. That's why we have to track the smaller waves to tell us where the larger waves eventually most likely will bottom based on Fibonacci retraces for the bounce and Fibonacci extensions for the next decline based on the first decline, because corrections always move in threes. So the ideal target zone is then, of course, 3,800 plus or minus, in this case, about 100. And then we'll have to see if we get there or not. The shorter time frame and the smaller waves really seem to suggest that we can easily get there anywhere between 38.70 and about 37.40 to be determined. Don't know even yet where exactly this wave B is going to top. So we don't even know if wave A has already bottomed, okay? If we go above today's high, I'm pretty sure the A wave has bottomed and the B wave is underway. Why? Because then we make a higher high, and so far the index has continuously made lower highs. We dropped, lower high. We dropped, lower high. We dropped, lower high. So once that pattern changes, so above today's high for all indexes, then in my humble opinion, the B wave is underway. And then we'll have to see where exactly this B wave is going to top. My primary expectation is at around 50% of the A wave. And then we'll have to see if that's going to transpire or not. So the black target zone is ideal, but we can deal with this much larger time frame of price frame, though I expect somewhere around 3,800 plus or minus 100. Also here, if we drop below the 76.4% retrace, which is at around 36.40, then chances really start to increase that we already topped and we are in our next decline, similar in length to the August-October decline. Last but not least, the Dow Jones. Also here, the gray target zone shows where a B wave can bottom. It's a huge range, and we simply have to let the price action determine where exactly this is going to happen. The ideal is the black target zone, hasn't changed. I'd like to see a 1, a 2, a 3, a 4, and a 5. For now, a wave 5 lower for wave A, a multi-day bounce for wave B to about 34,000, 34.25, depending on exactly where wave A bottoms, and then this wave C lower to about 33,000, 31.75. Also here in orange and red are the GTFO levels where I really start to question this primary expectation. Then the alternative expectation is, of course, the one I've shared with you ad nauseum. Let's see if I can find it. And let's see if we get there. It's a little slow today. There we are. That we have topped indeed for the larger B wave as a irregular expanded flat. But we are not even close to the levels where I see this alternative expectation being filled in. We're not there yet. That is below 30,250 to 29,750. Still miles away. Doesn't mean it won't happen. Again, of course, both expectations, the alternative and the primary, are looking for lower prices still yet to come, fitting with seasonality where we should see a low in about a week or so. So that is really all I have for today. Thank you so much for listening. Take care, trade safe, and I'll catch you all on Friday.